Indian markets end in the red following a choppy session. Nifty holds 25,800. Mid-cap index outperforms. The market breadth, however, continues to favor declines.
Shares of asset management companies rally after SEBI's mutual fund cost overhaul were less stringent than expected. Brokerage fees also slashed by half. Street does not expect any major hit on profitability of AMCs.
Shares of Crompton, Greaves and Voltas surge after brokerages turn upbeat on the consumer appliances firms, project an upside of anywhere between 13 to 30% on improved earnings estimates. Good evening, you're watching us here on Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day while recapping today's session as well. I'm Mangala Malu, with me Vinny Motiwala. Vinny, we ended flat, but it was a jostle between important levels for the market, right? We bounced back from the lows, we saw supply at the highs, so all in all it was a 150 point sort of trading range that we saw on D Street, at least in the frontline index. The mid-cap index, while it was higher by about 1/3%, that does not tell you the full story. The full story is told by the advanced decline ratio, where for the third day running, over 1,800 stocks were in the red. The only solace that bulls would have is that, towards the end of trade, we had about 1,800 as against 2,000 plus in the last two trading sessions. And come what may, the Nifty is holding on to the 50-day moving average, this time by the skin of its teeth. 25,815. By today's end, we will get the 50-day moving average closer to those levels itself.
Absolutely. Hi, Mangalam. And obviously a day where we ended flat. But when you look at it for the IT sector, that managed to close comfortably in the green. So Nifty IT among the top sector gainers. Your realty, that managed to do well, 3/10 to 4/10% of gain as well. While in terms of the losers, we had media, we had energy, auto sector, which were on the red side. Now, obviously, that is what is in terms of the markets that we're seeing coming in. But we have a very exciting lineup for you all on the show as well. First up, we'll start with the top movers and shakers of the day with Urmas Patakia. Then we'll talk about Ola Electric. The share stumbled after CEO Bhavesh Agarwal sold an additional 4.2 crore shares. Also, we'll focus on Crompton, Greaves as well as Voltas, which were surging in trade following rating upgrades from leading brokerage firms. Last but not the least, we'll delve into what are the key market events to watch out for in tomorrow's trading session. First up, for the first segment of the day, we'll go to Hormaz, who's at the big wall to tell us about the top movers and shakers. Hormaz.
Well, almost are unchanged today, markets being in snooze mode, but asset management companies were not in snooze mode whatsoever, and not just asset management companies, almost all capital market names did well today. HDFC AMC was up 7%, Nippon Life gained 6%, Motilal Oswal ended at the highest point of the day, KFin Tech had a good day as well. So all in all, a very happy day for the asset management companies. There's no bad news, turns out to be good news eventually. Ahead of Accenture's results, IT was the one that ensured that there were no further losses on the market, even though the Nifty ended off the highs of the day. TCS and Infosys contributed to the gains, as did Tech Mahindra and Wipro. So larger IT did well in today's session. Among the newsmakers, Meesho continues to grab headlines, finally ending 8% higher. So now more than 110% higher than its issue price. Ola Electric, another new low, 5% lower on the stock today. Antony Waste, again order win leading to an 18% jump, and some negative news on Sun Pharma dragging the stock lower today. Now, among brokerage reactions, Voltas, after a double upgrade at a very choppy session, eventually gave up most of those gains to end 1% higher. Hero MotoCorp recovered from the lows of the day to end 1% lower, and Crompton, where Motilal Oswal had a very positive note, ending with gains of close to 3%. And lastly, stocks at 52-week lows in today's session. Suraj Estates continues to grind lower, as does Ramkrishna Forgings, Liberty Shoes and Poly Medicure, some other names that ended at 52-week lows today.
All right, Hormaz, thanks a lot for that. We also had a bunch of asset management firms. They rallied in trade after market regulators SEBI revised total expense ratios for mutual funds by excluding the statutory norms from the equation, as a result of which we saw a lot of these stocks, the likes of HDFC, AMC, Nuvama Health, and a bunch of them, actually, Nuvama Wealth, rather, all of them spiking. Sonal Bhutra joins in with what the brokerages make of this move and how it impacts the industry. Sonal.
Well, that's right. The final total expense ratio slabs which are announced by SEBI have come in as a relief because the cut is lower than what was proposed in the consultation paper in the month of October. In fact, if we take you through the numbers, excluding brokerage, these slabs are actually 5 basis points higher than what was proposed in the consultation paper. Brokerage expense ratios, they are now cut by 10 basis points. The expectation was that they could be cut by 15 basis points. So this has come in as a relief for the AMC industry and for brokers as well. But what are brokerages making of this move? They say this is largely neutral to positive for AMCs and brokers as well, because the market was fearing there could be a bigger cut in total expense ratio. For instance, Morgan Stanley says there is a relief which has come in terms of GST and commissions, which was estimated at 11 to 12 basis points, but the final number gives a relief of around 1 to 2 basis points. This particular relief offsets the 5 basis points impact from exit load removal, and this would mean a 3 to 3.5 basis points impact on large AMCs. But yes, it will not have a big impact on their profitability. AMCs are expected to pass through 60 to 70% of the impact to distributors, so the net impact could be even lower to around 1 to 1.5 basis points. This will equal to around 4% of their operating profit and around 3.5% of their FY25 profit before tax, but not as big as the industry was fearing earlier. Jeffrey says this is a relief versus what was expected. The 5 basis points exit load cut on equity AUM, that remains now. This is a relief as well. Brokerage cap has been reduced to 6 basis points excluding levies versus proposed 2 basis points. So that is also something that the street seems to like. But the net impact of changes are expected at around 3 to 5 basis points of equity AUM, and AMCs may partially share it across the ecosystem, something like distributors. So it could be more negative for the distributors than AMCs itself. Overall, their view remains positive for AMCs, brokers and RTAs as well.
Thank you so much for that, Sonal. But let's move on. Also shift focus and talk about Ola Electric. The shares hit a fresh low after the founder and CEO Bhavesh Aggarwal sold an additional 4.2 crore shares, and this is following an earlier sale of around 2.6 crore shares. The management said the transactions were undertaken to repay the 260 crore rupee loan as well. Let's go across to Ria to give us more details on this one.
Well, yes, Ola Electric was down roughly 5% in trade today, and this is after yesterday's fall of 4% as well. And in fact, this was the third consecutive session of losses for the company. And this has happened after the founder of the company, Bhavesh Aggarwal, has sold an additional 4.2 crore shares of the company after selling 2.6 crore shares on Tuesday as well, when the stock took a hit of nearly 8%. Now, Ola Electric on Tuesday had said that this transaction was being executed to fully repay a promoter level loan of 260 crore rupees, and they had also said that this share sale was a one-time limited monetization of the founder's personal stake, and they had also highlighted that with this, all of the previously pledged 3.93% shares will now be released. Now, these two transactions up until now have been cumulatively valued at roughly 234 crore rupees, and some more selling is expected going ahead. The stock is also down roughly 60% since its listing in August of 2024, and a couple of key points to highlight here. The retail shareholding in the company has increased to over 17% in the September 2025 quarter compared to just about 8% last year, whereas the mutual fund stake is now at roughly 5.5% in the September 2025 quarter versus 4.5% in the same quarter last year. And this is after mutual fund holding had touched a low of roughly 2.5% in the June 2025 quarter. Now, going ahead, what will be the triggers for Ola Electric? The Q3 results will be something to watch out for, and remember, the company has already cut its full year revenue and margin guidance for FY26.
All right, good time to then bring in our guests. Mayuresh Joshi, Head of Equity Research at William O'Neill, and Somil Mehta of Mirae Asset join us now. Somil, let's ask you, there has been this jostling moves in the market where it's range bound, but it's very frustrating as we move towards the end of this year. The Nifty is managing to hold on to that 25,800 mark, but not breaking out. There are times when, you feel like, okay, it's going to break down. That doesn't happen. And you look at the mid-cap index doing extremely well, but the advanced decline, your portfolio says, the things are not as good. So how should one read it?
Absolutely frustrating. I totally get your point. It is the same case when it was when we were at 25,000, 25,400, those levels, and it was been consolidating for probably around 2.5 months there. Now this is the same case. We are around 25,500, 26,000 levels for the last 1.5 month almost. It has been a little frustrating, but I'll be focusing on more on the large caps. Small caps and mid caps a little, facing a little bit of selling pressure. But I will be expecting large caps to outperform here. Large caps should be the focus from here. Avoid the mid caps and small caps. For Nifty, support zone would be around 25,600, 25,500 levels, which is a very crucial support zone, and I'm not expecting Nifty to go below that. My targets on the upside would be 26,300, 325, and on the medium side, medium term outlook, I'll be expecting 26,700, 800 levels. So buy on decline should be the strategy. The medium term trend still remains positive. Bank Nifty very similar, but I think Bank Nifty is showing little better charts here. It has been forming a flag pattern, a pennant pattern just above the 40 daily moving average, which is a very crucial level. 58,590. This is a very crucial level to watch out for Bank Nifty. I'm not expecting Bank Nifty to go below this. My target should be well above 60,500, and if it sustains there, the next level will be 61,500, 61,700 levels.
Okay, and Mayuresh, a quick take on Ola Electric from you?
I think we've remained not so positive on this one, Vinny, for a long time. And again, I think the guidance that they've probably given out, not encouraging. I think the street probably is assuming that numbers will still be very, very soft. Whether it's a profitable growth after that, only time will tell. And competition is very intense. If you probably look at their competitors at this juncture, including the larger players, the platform, the dealership network they've got, the distribution, the after sales, I think competition, pricing, intensity, revenue guidance, margin performance, profitable growth, I think a lot needs to come through from Ola. So I think better players in the two-wheeler space to look at.
Right, better players in the two-wheeler space. We'll ask your views on the pharma space as well, but before that, let's go across to Ekta, because Sun Pharma was under pressure today. The US FDA has actually, given an official action indicated for their critical Basca facility. That's a setback for the drug maker. Analysts believe that this limits their ability on new complex generics. What could the financial implications of that be? Ekta joins in.
Well, yes, Sun Pharma is in focus in today's trading session on the back of negative news with regards to their Basca facility, which has been classified by the US FDA as an official action indicated status, which basically means that there are compliance issues in that particular facility. Now, the plant was inspected from the 8th to the 19th of September 2025. The company has said that they continue to manufacture and supply approved products from this facility to the US as of now. Now, analysts say that Basca facility is probably one of the most important facilities for Sun when it comes to their new complex generics, and hence the probability to deliver a potential positive surprise in the generic business might be lower for Sun Pharma as of now. But the official action indicated status as of now does not change the forecast, because analysts are not really pegging in a lot of complex generics in their forecast when it comes to approvals and sales from that particular segment. And hence, however, going forward, the approval timelines could change because of the compliance issues at the Basca facility. Now, remember that there are other facilities which are under the US FDA scanner, which Sun has. For example, the Halol facility, which has had an import alert since June 2022 and was classified as an official action indicated status post a June 2025 inspection. And they have the Mohali plant, which also has a consent decree or was sent a non-compliance letter in 2023. So yes, negative news for Sun Pharma, but how they basically respond to any kind of compliance issues will be critical to see in terms of what the complex generic pipeline could look like for the company going forward.
Thanks so much for that, Ekta. But let's move on. And Mayuresh, what's your view coming in for Sun Pharma as well? Today, this is a negative news flow, but otherwise in the pharma pack, is Sun Pharma on the top of the list of the pecking order for you?
So I think Sun, Cipla, Lupin were few of our holdings in our global portfolios, but I think we have offloaded them over a periodicity of time. Our take is that the sector might just go through a consolidation phase. What probably comes through as a trigger for the sector going forward is going to be the key specialty launches that each of these individual companies will probably get through. Sun has a very, very selective specialty pipeline. How are they able to monetize that? How are they able to probably get those phase 3 trials in place and probably launch these drugs are going to be critical. Similarly, in the case of Cipla, their multi-inhaler drug expected to get launched both in the EU and the US region is keenly watched out for Dr. Reddy's. It continues to be the biosimilars which are expected to get launched. And therefore, I think the take is this specialty pipeline is going to be extremely critical. We're waiting in terms of how this pipeline probably evolves and therefore take a call accordingly when the appropriate time probably comes. At this juncture, I think equal weight on the sector is.
All right, Mayuresh, thanks a lot for that. In fact, I'll thank you and Somil as well. Somil, may the wealth creation continues. Frustration is a daily thing. Wealth creation is a long-term opportunity. We'll watch how that pans out over the next few, trading sessions and beyond that as well, because we're all here for the long term. But speaking about the long term, there were a couple of brokerage notes that came by. They are positive on the long term for both Crompton Greaves and Voltas. And the stock started to surge in the short term itself. Hormaz.
Initiation, of course, on Crompton first up. The stock gave up. Most of those gains ended higher. But initiation from Motilal Oswal with a buy recommendation, price target of 350, implying a 40% upside. What they say is that they are hoping that the 75% stake that they own in Butterfly Gandhimati, they are planning to have some revenue synergies and cost synergies from that. They are also looking to have more ad spends that will help them generate or strengthen their brand strength going forward. They are expecting an EBITDA and PAT CAGR of 17 and 21% over the next 3 years. And as some risk factors, they highlight there will be high competitive intensity, and if there is a dip in demand in case there is an economic slowdown. In a bull case scenario, they see a price target of 460 rupees. That shows up a potential upside of 77% as well. For Voltas, it's a double upgrade for them by BofA. They've double upgraded it to a buy. The earlier rating was an underperform rating. The price target has been raised to 1555 from 1250 earlier. They're saying that it is going to be the biggest beneficiary in case there is a normal monsoon in a normal summer in calendar year of 26, and there will be additional tailwinds as well. This is a low base, there will be cost synergies, and there will be pent up demand that will boost the stock as well. They are expecting the current quarter to remain a subdued one, but they say that this is in the price already, and they are expecting a very sharp earnings rebound considering a low base. So they are anticipating a 44% CAGR over the next 3 years.
Okay, Hormaz, thank you so much for that. Important stocks to keep an eye out on as well. But on that note, we're going to slip into a very short break. After the break, we'll get you the top corporate voices along with key market events to watch out for in tomorrow's trading session. Welcome back to Markets Forward on CNBC TV18. Now, fresh trouble for Indigo. The airline is now facing a probe from the Competition Commission following the mass cancellation of flights earlier this month. The CCI will probe complaints against the airline after the recent disruptions. Now, Indigo commands 60% market share when it comes to the air traffic. Parikshit is joining us now to give us more details on this one. Parikshit.
Well, we have been seeing a lot of customer complaints against Indigo for the kind of disruptions we've seen over the last few weeks. The Competition Commission of India, which is our antitrust regulator, has taken cognizance of a complaint that it had received in the last few weeks. The complaint was regarding abuse of market dominance under Section 4 of the Competition Commission of India. The reason why this is important is because this is always the first step before a final and proper investigation is launched. At this stage, the Competition Commission will only look at and decide whether an investigation has to take place or not. This process could take place anything between weeks to a few months. Once an investigation is ordered and Indigo is found guilty, first, the investigator will have to decide whether Indigo is guilty or not of market dominance. If it is held guilty, then action will be taken under Section 4 of the Competition Commission of India Act, which means that 10% of the company's total revenues could be the penalty for such an offence. Secondly, there could be structural remedies that could be ordered by Competition Commission of India. The CCI may also seek the removal of certain routes from the Indigo network if the investigation finds the airline guilty of market dominance. But remember, we're at a very initial stage right now. This is only a time when the CCI has taken cognizance of a complaint. They will now decide whether a formal probe has to be ordered against Indigo Airlines or not.
Parikshit, thanks a lot for that. In fact, this development comes on a day when the stock did well and the Indigo CEO told his employees, and this is the reason why the stock did well, he told his employees that the worst is behind the company. Peter Elbers said that the operations had stabilized at around 2,200 daily flights, which have been restored right now.
What we witnessed seems a compounding effect of several factors. Everyone wants answers. Speculations are circulating, but I encourage everyone, please stay calm, focus on your professional responsibilities and avoid engaging in such speculations. We need a full-scale analysis.
Okay, on that note, before we wrap up this edition of Markets Forward, let's go across to Gaurav, who's here to tell us what are the key events to watch out for in tomorrow's trading session. Over to you, Gaurav.
Well, yes, if you look at tomorrow, first is Shriram Finance. Remember, there is a meeting, board meeting, where they will consider fundraise, and it is important because there are speculations going on that Japanese firm MUFG is looking to buy around 20% stake in Shriram Finance for a valuation of as high as $4 billion or even more. If you look at the structure, that is something that a key thing to watch out for. And in fact, if you look at the stock performance, it has ran up today itself. Dr. Lal Path, this is also one stock where we will keep our focus because tomorrow is the record day for bonus issue in the ratio of 1:1. Other than that, we'll be getting listing of ICICI Prudential. The 10,000 crore IPO got oversubscribed almost by 39 times. And if you look at the grey market premium, that suggests around 15% gain from here on the listing day itself. Apart from that, FX reserves data, that is something that we will be getting for Indian markets. This is also important given that a lot of volatility going on in the Indian rupee. From the global markets, Bank of Japan. Now, the decision from interest rates from this segment is a key thing to watch out for. And the reason being that there is a lot of carry trade which happens between Japanese and US currency. And given that there is a speculation that 25 basis point of hike can happen, although it is factored in, any kind of surprise could act negatively for US market as per experts. Other than that, from the US markets itself, we will be getting data for existing home sales and at the same time core PCE price index. So definitely let's keep an eye on that as well and see how market performs and reacts to these levels.
Right, Gaurav, thank you so much for setting us up for trade tomorrow, Friday. A lot of events and cues to watch out for. With that, we're out of time on this edition of Markets Forward. You stay tuned to CNBC TV18. We'll be back with more news and updates on the other side.